My dear trader, let me tell you something important. Most beginners do not lose money because of bad strategies. They lose money because they trade without a routine. In this video, I will show you a simple daily trading routine. We will use real gold charts. I will show you how I use time, EMAs, and volume to decide when to trade and when to do nothing. Section 1. What a trading routine really is. A trading routine is not an indicator. It is not a strategy. A trading routine is a schedule for your mind. Professionals do not wake up and click buy or sell. They first ask one question. Is this the right time to trade? If the time is wrong, the best decision is to wait. Section 2. Pre-market routine, no trade zone. Now let us open the gold to USD chart. When trading gold, the pre-market period generally refers to the transition between the quiet Asian session and the high-volume London Open. Because gold is a global commodity, it doesn't have a single opening bell like a stock, but the liquidity builds in very specific stages. Here is the breakdown in UTC, Coordinated Universal Time. If you need more details, check the description. Before the market moves, I do one thing. I don't predict. I prepare. Look at a pre-session chart. This is before the main trading session. Look carefully at the market. First, look at the EMAs. EMA 20, EMA 50, EMA 200. They are flat. They are close to each other. Flat EMAs tell me one thing. The market has no urgency. There is no pressure to move. Look at the volume, small, uneven candles. This means institutions are not active yet. And finally, there is no clear high or low being targeted. That's why I call unclear liquidity. This is not a bad market, this is a waiting market. Section 3. Session routine, when volume arrives. Now watch carefully. I did not change indicators. I did not chase price. I only did one thing. I showed up, on time. Notice the difference now. EMA 20 starts moving away from EMA 50, this shows momentum. EMA 200 gives me direction. I do not fight it. I respect it. Look at the volume. Now look at the candles. They are bigger. They are cleaner. Volume is expanding. This is not random movement. This is institutional participation. And now we can clearly see equal highs and equal lows. That's where liquidity exists. I do not force volume into my routine. Volume comes to my routine. Section 4. Execution routine. Execution is the smallest part of my routine. If I need to think too much, I do not trade. Execution checklist. Session is active. EMAs are aligned. Volume is present. Structure is clear. My emotions are calm. If even two of these are missing, I step away. One or two high-quality trades are enough. Section 5. No trade example, very important. Now let me show you something important. This is after the session move. EMAs become flat again. Volume starts to disappear. Price becomes choppy. This is where beginners get emotional. But professionals stop. Since gold is traded as a spot commodity, XAU, against the US dollar, USD, its hours are slightly different from standard currency pairs. The gold market closes for 1 hour every day for bank settlement and maintenance. Many professional gold traders avoid holding positions into the Friday New York close, 21 to 22 Universal Time Coordinated. Because liquidity drops at the end of the week, the price can become choppy and unpredictable as big banks close their books for the weekend. Remember, this is where most beginners lose money. The move is already done, but emotions are still active. EMAs flatten again. Volume disappears. This is not an opportunity. This is a professional no-trade zone. Section 6, Psychological Routine. Let me be honest with you. Routine protects me from myself. When I'm bored, I'm safe. When I'm excited, I become dangerous. If you master your routine, strategies become simple. Always keep simple weekly routine. You don't need more strategies. You need fewer mistakes. If you want a printable version of this process, comment ROUTINE. Tell me one thing. Do you want part 2, where I tighten this even more for perfect? Subscribe if you are serious about trading psychology and structure. I will see you in the next video.